Hello my friends, today we're going to talk about NIO, the Chinese electric vehicle company that matches very impressive growth numbers with equally impressive loss numbers. It will be amazing. So my friends, today we're talking about NIO. I've had a real interest in EVs ever since they came out. I drive an EV myself, and these Chinese EV stocks like Xpeng, Li Auto, BYD and NIO always had my interest. NIO stock has been a stock that could have made you a lot of money if you got it at the right time. I remember it trading at around $2 for a long time, but then when the revenue started growing like crazy, everybody wanted a piece of the action. But first, let's talk about what makes NIO so special compared to other Chinese electric vehicle brands. Well, for one thing, they have an innovative battery swapping solution. In this solution, customers can drive to a NIO battery swapping station and quickly switch their drained batteries with fully charged ones. So far, there are about 400 in the whole country, and with China being as big as it is, this actually isn't that much. But like with the Tesla superchargers, it is something they are building out as fast as they can. And just like those superchargers, it gives them that competitive advantage over other electric vehicle manufacturers we are looking for. The battery-as-a-service technology allows NIO customers to quickly swap their batteries up to 6 times per month without leaving their cars. It's faster than EV charging, clocking in at around 3 minutes per swap. Customers subscribe to this battery-as-a-service model, they get a discount of around $10,000 off the sticker price. But they have to pay a monthly fee of around $145, and this includes a 70 kWh battery. This is a great mode for NIO, because I can imagine when you are once used to this, you don't want to do the slow charging thing that we are getting used to with Teslas and other EVs. Besides this battery-as-a-service offering, they also have an autonomous driving as a service model. This NIO equivalent to Tesla's autopilot is in contrast to Tesla, where you have to pay for this service with a one-time fee, a monthly subscription-based cost. You pay around $100 a month, so you are able to use this service. What you might not realize is that NIO is also active in a lot of European countries and even has a couple of swapping stations in Norway, as well as an R&D center in Berlin. The electric car manufacturer also plans to expand to 25 markets by 2025, including the United States. As you can see, NIO has a lot of things going for it, in terms of creating a moat and having a unique business model. I think this model gives them a real competitive advantage. Now first, let's get back to the stock chart. Like I said, if you timed it right, you could have become very rich with this company. From $2 a share to $62, that's a 30x X growth, creating a market cap of over $100 billion. Now this was crazy to watch, and the valuation has gone back down drastically thereafter. In part by the company itself, in part by people who started using their brain, and in part by the Chinese government. That's been a bit of a question mark of late. A lot of Chinese stocks have been beaten down in the last year and a half because of Chinese government policies and uncertainties. That has kept a lot of investors away from investing in Chinese stocks, as they have been tagged as high risk. And it is rightfully so. The Chinese government has all control and can do whatever they want at any given time, and they have shown that they are willing to do that no matter what the consequences are for these companies, as long as the Chinese government comes first. Furthermore, NIO is a startup, and since it's in the EV space, it's even seen as a tech startup, whom are considered high risk. In the last year, ever since monetary policy shifted, investments into high risk stocks has been drying up, so NIO got hit with a double whammy on this one. And now we'll have a look at the all-important numbers. Auto analysts expect NIO to incur a final loss in 2023 before becoming profitable in 2024. Now this is an interesting article, because I remember that in 2021, NIO themselves said they hope to reach profitability by the end of 2022. And it seems we are further away from profitability than ever before. The growth is undeniably there. When you look year over year, the numbers are super. And even when you look at them quarter over quarter, this looks just great. As long as they can keep this growth going and get to a path of profitability, this could be a great investment. However, I do not see this path of profitability before me in the next couple of years. Certainly not enough to have me excited to pay 17 billion in market cap for a company where the losses keep on mounting. Also, they are not helped by the fact that the Chinese government is planning on phasing out their subsidies for electric vehicles in 2023. A lot of EV makers, from NIO to Xpeng and Zeekr, have said that they expected a sales slowdown in 2023, since most people are pushing their orders forward to still receive the subsidy in 2022. And even though NIO obviously has a moat with their unique service models, they also have to deal with a lot of competitive pressure from other Chinese companies like BYD and Li Auto, but also from foreign companies like Tesla, that continues to expand its supercharger network around the world and more specifically in China. For me, the story with these Chinese car manufacturers like NIO or Xpeng or Xpeng for that matter is the same. They could be very interesting in the future, but for now they are not something I would dip my toe in. Now let's have a quick look at the chart again, so I can give you my thesis on where the price might go. I think Q1 of 2023 will be a disappointment for NIO, given that most people, like I said before, moved their order up to Q4 of 2022. So I feel that after that report, we could see some kind of bottom. And I feel that we could end up in a price range somewhere between $2 and $5. So still a lot of downside from my perspective. Now this is not taking into account any big micro environmental changes. Changes in fiscal policies, changes in Chinese policies, all these things can affect the stock price both in a positive or negative way. But if the trend continues like this and we get some more bad news, like the recent Q4 delivery guidance cuts they gave yesterday, I can see a path down in the short term. But of course, like I said before, it is something interesting to keep an eye on. With revenues like this, one dreams of them turning a profit with margin coming close to those of, say, Tesla. And then this could be a whole different story. That was my take on NIO. I hope you enjoyed this video. If you did, be sure to like and subscribe and let me know in the comments down below what your take is on NIO. Catch you soon. See ya.